can we wait for another 2 more minutes and then?
Sir, we will start, sir. Let others join. Just a few seconds, sir. Live streaming the video.
Okay. So in screen தெரியுதா உங்களுக்கு?
Yes, sir.
Okay.
Good afternoon, everyone. I welcome you for the 15th day of technology-based entrepreneurship development program in aquaculture, sponsored by Department of Science and Technology and organized by Sathyabama Institute of Science and Technology. I welcome our today's chief guest, Mr. Rahul Chandramohan, CA and Managing Partner at Brad and Company LLP. I welcome you, sir.
Thank you. Thank you.
Sir, the session is yours. You can start now.
Okay. So, good afternoon, everybody. So, this is my second session in Sathyabama Institute, where I have been, presenting on the taxation front in the earlier meetings when we used to have, and this is my privilege to, take part in the aquaculture entrepreneur event that the institute has coordinated. I could understand that this is your 15th day of the program, and you have 1 hour session of different aspects while doing business, the things that you need to be aware of, and the things you need to take away as key information for running the business properly and effectively. So this gives me an immense pleasure to address you on the gathering on the income tax basics and the forms that every businessman that involves themselves in business needs to know. And basically, moreover, I am not going to, unlike, in the previous meetings, I used to discuss on the statutory front where, all the numbers, key technical things that are there in income tax and taxation front. This time, I am going to address the gathering more on an entrepreneurial view, where the things are in such a way that every entrepreneur should know. That would be a requirement from the auditor's perspective, or from the stakeholders, for example, from banks, for example, or from investor perspective, or from multiple angles, wherever information is required from the businessman perspective. That is what I'm going to cover in this session today. Possibly we'll have the classification of business to be 2 types. One would be the corporate business, and the second would be non-corporate business. Let me just break down what this is. Corporate business refers to the private limited companies, and non-corporate refers to the other type of associates. Basically, the individuals, the partnership firms, the HUF, the trust, and all those things. So that is covered under the non-corporate business people, and I have classified on 2 fronts. The one is this non-corporate, and the second one is corporate. First one, let's get on to the non-corporate business people. Coming on to this, you being entrepreneurs, you need to know a set of forms that is applicable for those people who are earning income from business or profession. You being into aquaculture, if you earn any revenue, or let me get into the basics first. If you earn a revenue, if you bill a party, you receive an amount that is called as a turnover, and out of which you will get have certain expenses apportioned to the specific business, out of which, if you deduct those expenses, you will get a concept called as gross profit. The taxation is made on the profit. Basically, on that profit, you have to file your returns, and you have to pay the applicable amount that is to be taxed. So let me show the rates and the things that needs to be done on a later stage. But now, coming on to the profit front, if you earn a profit, you need to pay tax. Basically, there are certain exemptions to it. But being individuals earning income from the business or profession, you need to know which Sorry.
Sorry, sir, some interruptions.
Okay, done. Getting back to the point. Yes. Get back to the point. So, whatever income from business or profession you have, you need to file the form called as ITR3. This is applicable for the individuals and HUF. HUF is something which goes by the concept where, family generation wise come together and start up a business and do a business. That is called as HUF. Whereas individuals, let's say for example, normal common person like me doing a business, if I have any profit or gain from business or profession, I need to file a form called as ITR3. So this ITR4 is a concept called as simplified return, where there is an option for every assessee to opt for a section called as section 44 AD, section 44 ADA, and section 44 AE. Section 44 AD means whatever income you earn. Let's say for example, I have a income of, let me just open up Excel also. So there are three things. One is 44 AD, second is 44 ADA, third one is 44 AE. So let's say for example, I have my turnover as 1 lakh. Okay, let me put it as 10 lakhs. My annual turnover is 10 lakh. Okay. So me being a person doing a business come under 44 AD. If I am a person who is into profession, will come under 44 ADA. If I am into truck business, I mean, truck business, then I will come under 44 AD. This is not 44 AE is not applicable to you guys. There are certain cases where you might have to do some consultancy with relating to aquaculture. Then you need to come under 44 ADA. Profession for technical services would come under this 44 ADA, and the business is normal aquaculture business, right? So whatever income you earn, you show them 8% net profit. That is whatever income. Let's say for example, you have earned a profit of 2 lakh rupees. You don't have to show this 2 lakh rupees. You will be straightforward assessed under 8%. But if you have received your amount in bank, then you can show, you have an option to show only 6% profit. If you could show where you have earned 2 lakhs, if you show 60,000, that is sufficient. If you get opted under 4480, no questions will be asked. You can straightforward opt in 4480, show 6% profit. Whatever tax is applicable for the 60,000, 60,000 it is not applicable. But being an individual, you can straightforward just show 60,000 and then need not pay any tax, and you could be walking away free, tax free. In case if you have incurred for a technical service, then you need to show 50% of your gross income as your income. I mean, gross receipt as your income. Being on a profession, you won't have to incur much expense. Only this 50% of this 5 lakh will be treated as your income, and the taxation will be on the basis of this. So this is the option where you have to opt in that. Where you have to opt in the 44 AD or ADA, you need to file the form called as ITR4. So once you file these forms, you will get an acknowledgement called as ITRV. This ITRV is the document where all the banks will ask, all the investors will ask, and all the financial due diligence team will ask. Everywhere you go, you need to show. That is a top sheet for filing this return. This return will be somewhere around 60 to 70 page document. And for that, there will be an acknowledgement copy called as ITRV. So this is the basic of the forms. These are the additional forms that you need to know. There is a concept called as Form 16A. Whenever people incur certain services, there is a concept called as tax deducted at source. This concept is applicable where there is a contract involved, or if there is any salary, or if there is any professional services, if there is any rent, wherever it is applicable, the person who is responsible to pay rent. Let's say, for example, I stay at me being a businessman, I have a company called as A Limited, and I have Mr. Money. This Money, what he does is he rents me for 1 lakh rupees. Okay, this is my monthly rent I have to pay. The A Limited, what A Limited has to do is, while paying back the rent of 1 lakh rupees, there is a section called as 194I. Okay, under this 194I, A Limited will deduct 10 percentage and pay this 10 percentage to the income tax department basically, and this will be paid to the IT department, and the rest 90,000 will be paid to the Money. Just a minute. Yeah. So getting back to this, under 194I, they'll deduct this 10,000 paid to the income tax department and pay 90,000 to Mr. Money. Me being Mr. Money will get a form called as Form 16A. That is what is there in the slide. If you could see, 16A will be provided by the deductor to deductee. Deductor is the person. A Limited is the deductor here, who deducts the amount is called as deductor, and to whom it is deducted is called as the deductee. So from deductor to deductee, he'll give a certificate called as Form 16A. So whenever we do a business also, we being on the other side, let's say for example, we do a technical service for aquaculture, for example, there is a section called as 194J. There we get 1 lakh rupees. Okay, we charge 1 lakh rupees. A Limited will be the person to whom the amount will be deducted. Let's say, for example, we are providing it to B Limited. Okay, this 10 percentage is 10,000 will be deducted by B Limited, and he'll only pay me 90,000. To A Limited, only 90,000 will be paid by the A Limited. This 10,000, where it will go? It will go to the IT department, and it's not just direct income tax payment. It is basically a concept of depositing the tax earlier to when we need to file the IT returns. Once, let's say for example, this happens on 1st of June 2023. Okay, so we have a financial year of 1/4/2022 to 1/4/2023 to 31/3/2024. For filing this, we need to pay tax. Being individuals, we need to pay tax by 31st of July 2024. But this transaction happened on 1/6, and while making the payment, he'll make the payment to the government on 1/6 itself. 1/6/2023 itself, he'll make a payment of 10,000 rupees. Let's say, for example, I need to pay tax for the whole year to the extent of some 2 lakh rupees. Okay. Out of this 2 lakh, when I make the payment on 31st of July, I have to pay only this 2 lakh minus 10,000. How will I know that I have this 10,000 is what comes under a form called as Form 26AS. In this Form 26AS, whatever tax is deducted from my name will come under this Form 26AS. This is what the banks will ask when you say you have TDS amount. So this is what your tax liability will be on the date of payment. But this 10,000, whatever Mr. B Limited has deducted, will go and sit in my Form 26AS. For deducting and paying to the department, he will give me Form 16A. So this is the forms that every businessman should be aware of and should be knowing. and you should collect it once the TDS amount is deducted. Because if you receive less amount and if they tell you that no, we have deducted TDS, you need to collect this Form 16A as a proof. Because there are certain cases where it might happen is they'll let you know that the TDS has been deducted and they won't pay it to the government, so that you won't be able to claim credit in the while filing the IT return. Or in case if you have liability of 0 rupees, you can get this 10,000 refund after filing the income tax return. That is the concept. So coming back to this, so there is also a new concept introduced that is called as annual information statement, where all the details of the tax collected and tax deducted will come. Whatever payment you have made, that will come. SFT information is to technical detail, so I don't think it is necessary for you guys. So moving on to the next thing, whatever tax has been paid, that will come. Whatever demand or refund, it will come. And then GST information, any your SB account details and SB income details, everything will be popped in this annual information statement. So this is a new concept where whenever you have registered your PAN with the income tax portal, this shows this annual information statement. In this, you can collect whatever income you have earned in that year. Now, wherever you have earned income during the year, it will come under this annual information statement. Like prior to 2020, AAS was not there, where if you show a particular income, that is what your income is. But now moving into the digital era, whatever you show over here, even if you don't tell me what your SB income is or how many bank accounts you have, I'll be able to get details from this annual information statement. And there is a concept called as tax audit. Whenever you earn an income above 1 crore and your cash receipts or payments is above 5% of what total receipts, then you are subject to tax audit. So also I wanted to let you know guys on this thing. 44 AD, if your turnover is less than 2 crores, you will be able to opt in directly or of showing this 8% or 6% limits. So for tax audit, when your income is above 1 crore, yeah, when your income is above 1 crore, if your cash receipts or payments is more than 5% of the total receipts, then you need to do tax audit. So tax audit is done for this person who's having their turnover or gross receipts above 1 crore. Okay, so from business. So that is also very important. From only from business, not on loans or something like that. So only for this it is applicable. In case if your receipts or payment is more than 5%, being in cash is more than 5%, less than 5%, then this 1 crore is basically considered as 10 crores. So whichever assessee is having their turnover about 10 crores, it is mandatory to go under tax audit. So for this, they need to file a form called as Form 3CB 3CD. This is the basic thing, and then this is the rate of rate of tax that everybody needs to pay. I have a separate for this there is a separate thing on the budget of 2023-24. That is actually this is the what the rate is. I mean you could screenshot it if you want. So basically up to 3 lakhs, it is nil. 3 lakhs to 6 lakhs, it is 5%. 6 lakhs to 9 lakhs, it is 10%. 9 lakhs to 12 lakhs, it is 15%. 12 lakh to 15 lakh, 20%. And above 15 lakhs, it is 30% basically. So this is what, the rates of tax as per the financial year 23-24. But my slide has the rates as per 20 to 23, which is now the due date is over. So just wanted to keep you posted on that. That is what the differentiating factor, which is up to 2,50,000 is now 3 lakhs, and that is what the amount is. Moving on to the next thing. This is a comparison of the, you might have heard the buzz about the old regime, new regime, and the proposed new regime. So the old regime, we had a concept called as there is still now the concept is still now, and there is a concept called as rebate up to 7 lakhs. You don't have to pay any tax wherever your income might be. You don't have to pay any tax. But moving on to the new regime that was there in last year, I don't think that is applicable for now. So let me go on to the proposed new regime for the for the financial year 23-24. Up to 7,50,000, you don't have to pay any tax. Being an individual, covered under the proposed new regime, and over and above 7,50,000, being a salary income. If it is a business income, then up to 7 lakhs is no tax, not taxable. So, this is the comparison of the income. So, looking at, on an overall level, I could see the proposed new regime to be, much more beneficial. Just a minute. Yes. So, moving back to this. So, I mean, being a new regime is, beneficial in many fronts. So, you could just take a screenshot of this as well, or I'll share the PPT with Sudan so that you could get the PPT copy. Yes. So, this is the rates for the non-corporate entities, being individuals or AOP or BOI, for that matter. Moving on to the corporate business of the domestic companies. I mean, I have covered only the domestic companies here. Foreign companies I have not included. So I'll go on the domestic companies front, where I have explained what is a domestic company means. Is domestic company who's incorporated in India and has shareholding of majority of the shareholders being Indian entity or Indians for that matter, Indian citizens for that matter. And then, the domestic company has to, for that, we need to file a form called as ITR 6. So when you file ITR 6, it is for the private limited company where you finalize your Schedule 3 and then show all the financials in the ITR 6 form. The same AIS, 26 AS, all those will come. Apart from that, there is whenever a company is audited under the Companies Act, where you need to mandatorily do a statutory audit. Once the statutory audit is done, under income tax, you need to file a form called as 3CA, 3CD, and for individuals, it was 3CB, 3CD actually. Yeah, it was 3CB, 3CD for individuals. But when you get audited under any other law, then you need to show 3CA, 3CD. Then, if you have any international transaction, there is a concept called as arm's length pricing and transfer pricing. For that, you need to file a report called as transfer pricing report under section 92E. That form is called as form 3CEB. For companies for the previous year, whenever your income does not exceed 400 crores, your tax slab is 25%. Normally, we being companies incorporated after 2019, the rates will be 22%. You could offer 115 BAA, so the effective rate would be 22%. And then there is a concept called as surcharge, and all those will get applicable. Plus, this cess will be applicable. So this is basically the tax slab rates for the domestic companies. I was just reading an article on the taxation of aquaculture for the entrepreneurs, those who are into aquaculture on a well level. There was a report published by KPMG in the year of 2021, and post that there was additional articles written by them on the aquaculture front. So on that note, I had, was able to see on the overall corporate income tax rates applicable to the, the companies, which is basically the around in Australia it is 30% on year. If you could see, for the purpose of the corporate income tax covered under the aquaculture business, it is on an average ranging from 21.8 percentage to 22.7 percentage basically. So on this note, I just wanted to tell you that on India we charge we could also opt 22.7% is what the average rate that is charged worldwide. We also have, if we could opt in for 115 BAA, our rate would be 22%. Plus, we have a surcharge of 7% in addition to this, which would be 22 into 7%. Come up with this. On this, you will also have a 4% of surcharge, 4% of cess over above this. We around, sorry, this is we averagely have around 25% in India. So, looking at any exemptions that is applicable to aquaculture companies, whatever is applicable to the ordinary company, it was prior to 2019. There were few exemptions to the aquaculture companies in India, but moving after that, there is no specific deductions or there is specific allowances that is allowed to the aquaculture companies or individuals for that matter. Just it is in line with the other company. There are no additional tax waivers or tax benefits that is applicable to the aquaculture business basically. So on overall level, I mean the areas where you could I mean bring in your business where you could get special tax incentives or special taxes and levies where you could get additional benefits is when you go to China, you have a special tax incentive. In Japan, we have a special tax incentive, and in Russia, there is a special tax incentive. They being companies, I mean, they being landlocked country, China being landlocked country, and Japan being, at the edge of the continent. So for them, the special tax incentives are available, and special tax and levies are available to the Faroe Islands, Iceland, and in Norway. Norway being the place where so many aquaculture companies exist. These are the countries where there are special tax incentives and special tax levies that is applicable. Basically on marine and inland aquaculture, they had tax on 50% of their taxable income. Basically, then I mean, for in China alone, it is chargeable at 50%. And if you could see in Iceland, they also had a concept of levy for protection of salmon and rainbow trout through fish farming in the sea. They had a additional taxation levy, so they had a special rates as well. So and then they also had the excise duty as well, which is well aware not applicable in India. Just wanted to keep you guys posted on this. These are the countries where you could get special incentives when you are trying to open up a FDI or get some foreign investments. Could plan in such a way that the income is coming or routing through China or Japan or in Russia, but where there could be certain complications when it comes to land bordering countries in FEMA. But setting up entity overseas, that is possible. So just wanted to post you guys on this information. And yeah, moving back to this thing, I wanted to include a few things on the taxation front. I couldn't find time to prepare the slide on that. So on the basics of income tax, so I wanted to include there's a concept called as previous year and assessment year. You need to know who's an assessee and types of assessee, and then yeah, let me start from this previous year. We are okay. For the purpose of income tax year, there is a concept called as calendar year. And there's a concept called as financial year. Calendar year is basically which starts from 1/1/2023 to 31/12/2023. This is not considered under Income Tax Act. Financial year is considered under the Income Tax Act. Basically, it starts from 1st of April 2023 to 31st of March 2024. So this is the financial year. Okay. For the purpose of filing this, income tax returns, what we need to do is basically file the returns of financial year 23. We call it financial year 23-24. Okay. For this financial year 23-24, 31st of July 2024 is the due date for filing ITR for individuals. And 30th September 2024 is the time for filing tax audit reports, and 31st of October 2024 is the due date for filing ITR for tax audit cases, corporates, and partners of tax audit cases. For them, this is the due date basically. So, and then moving on to the previous year. Previous year is the year, you call it, let's say for example, for us, the assessment year, if you are sitting under FY 23-24, the previous year is previous year 22-23. So the thing is, I take the financial year 23-24 and I assess my ITR in the financial year 24-25, right? So the assessment year is 24-25. For which year I am assessing, it is called as the previous year. For previous year 23-24, that is 1/4/2023 to 31/3/2024, I will assess it in 24-25. The concept of income tax applies to an assessee. Who is an assessee? Assessee is a person. Okay. Person can be an individual. I had classifications in the earlier. I'm just going a bit detail into this. Can be individual. Individuals is a person. I mean, let's say for example, Mr. A. Okay, Mr. A individually, Mr. B individually, Mr. C individually, doing a business or something like that. They'll be coming under individuals. Who is the HUF? HUF is basically a concept called as Hindu undivided family. Let's say, for example, Mr. A is father of Mr. B, and Mr. C is basically the brother of Mr. A. A and C are brothers. Mr. B is the father. Mr. B being father of the family, called as Karta, and they enter into a family business, then it is called as HUF. And then there is a concept called as AOP or BOI. Is association of persons, or BOI is called as a body of individuals. When A, B, and C, without any deed or any structured form, they join together and do business, and they don't have any registrations or something like that, then they are called as association of person or body of individuals. They set up a separate body to do business. Okay, then they are called as AOP or BOI. There is a concept called as firm or LLP. You might have heard about LLP and private limited companies in the earlier session today. So I am not going much detail into it. Being firm or LLP, those person, let's say for example, they have a partnership deed or an LLP deed where it will state a common objective. They need to, they have a common business. They'll enter into a common business based on the partnership deed, and then Mr. A, B, and C will start A, B, C, and Co. That firm is called as firm or LLP. Firm, I mean, under Income Tax Act, firm and LLP are the same. And then there is a concept called as limited companies, which is basically considered under corporates. Corporates can be domestic companies, and foreign companies. Companies as a whole can be private limited or a public company, which is basically limited. So these are the types of assessees under Income Tax Act. And okay, there is also one more thing, my left. Trust and artificial juridical person. I mean, artificial juridical person is somebody who is not a person by law, or there is no person, but for the purpose of assessing under Income Tax Act, that person is brought to life by court or any legal entity for that matter. That is called as artificial juridical person. Trust, you might have heard of it. Basically, when there is a common objective to go, for a common purpose, they create a trust, put in money, and spend it only for that objective. Um, that is called as a trust. Trust, for that there are certain exemptions under 11, and there is concept called as 12A registration, and then ATG deductions can be claimed by the trust. So apart from this, unlike last year, I was explaining about the old regime and new regime, right? I mean, out of that, yeah. So previously there were deductions under ATC, ATD. All those deductions is not applicable. I mean, it is not there in the new regime. If you want new regime, you can basically you have to forego all the exemptions and benefits that is availed under that is allowed under the Income Tax Act of this ATC, ATD. All those provisions is not applicable under the new regime. You can claim those deductions only under the old regime. So basically, if you invest in LIC or something like that, you won't be able to LIC mutual funds and so many deductions are available. If you don't, if you know basically invest in those, you will be able to claim deductions in the earlier years. From this year onwards, you won't be able to claim if you're opting for a new regime. I mean, under new regime, which is clearly beneficial even after claiming deductions, this table shows you how much tax is applicable. So clearly the new regime is beneficial. So all the concept of deductions is abolished. Only the, okay, let me also explain on the gross front how taxation happens. Taxation and 5 heads of income. Basically under Income Tax Act, a person can earn under only 5 sources: salary, house property, capital gains, profits or gains from business or profession, and then other income. So these are the 5 heads where we need to show our income basically. So I have discussed about the profit and gains in the in the earlier times. So capital gain is when you sell a capital asset. If you gain any income from it, you need to show under this. If you have any rental income, you have to show under house property. Whichever is not, this is a basically a balancing head where you need to show whichever income which is not available under other 4 clauses. If you couldn't show any under any of the other 4 clauses, you need to show it under other income. So salary is basically the salary income that a person derives. So this is the 5 heads of income. So on the basis of this all put together, let's say for example, I have a salary of 1 lakh. Let's say I have salary, I mean income under 5 heads, which is 5 lakhs. So this is what my total salary. I mean, this is what my gross total income would be. Let me also show you guys the ITRV. So this is called as the total income. This is what will come under your income tax return. We had discussed about, this is basically the income tax return acknowledgement. We had discussed about this form ITRV. This is form ITRV. This is called as assessment year. This is for the last financial year that we had filed. So for this individual, we have filed on 23-24, for which the previous year is 22-23. So there are sections. I mean, status is the individual because I have told you multiple things, right? On the basis of that, a person who's having a business income need to show under ITR 3. That is there. And then, if you could see current year business income, if this is called as total income, okay. So this is called as the gross total income. This 5 lakhs will come over here. This is what the 5 lakhs is. So, and then there is a concept called as AMT that is not applicable for you guys. So, I mean, not necessary at this stage, being okay. And then on up to 5 lakhs, no tax is applicable. If you had income more than 5 lakhs, then it will come under over here. And then, I mean, if there is any TDS, that will be deducted. And if there is any tax payable, that would be shown over here. That will be paid and then closed off. Basically, this will be e-verified on everything, and we don't have to send it to Bangalore and all. If there is a digital key, you can just sign it out, or you can, if you could give out OTP, other OTP, you could file the ITR returns basically. So this is okay. On this, if you have any tax, a tax will come. Let's say, for example, I have a tax, and then as I told you, there will be a concept called as TDS. When a person deducts TDS, that can be deducted. And if there is any excess of TDS over income tax return, that you will get as a refund to your bank account at the end of the year. This is the concept of income tax basically on covering on a whole large level. So that is what the concept of income tax is. I had briefly covered on the total income tax, how things work out. I mean, if you have any questions, please let me know.
Anyone having any doubts?
And I have, I'll post my number and my mail ID. If you have any questions, you can just post. I put in the message. So no. I mean, was that clear or something that you needed on a brief level that I could incorporate and bring in? I think was this session informative or something like that? I mean, were you able to figure out how things work out and how this thing happens, how income tax happens? Okay. Okay. So on any front, I understand that there are no questions from your end, but if you want to know something, just let me know so that I'll be able to know. Okay. Employed and private. Okay. Okay, you want to start up separately, is it, Jagan? I mean, you can just reach out to me over my mobile, over WhatsApp or something like that. And I mean, we are a CFM where we do all startup activities, and we also get into private equity, and we also help in incorporation of companies. So, if there are any questions that you can just post me over there. So, yeah. So relating to the session, yeah, if you have any questions, we will just talk about it.
If you have any questions, means you can unmute yourself and ask them. Ask them.
Even if you have it under your chat, that's well and good. That's okay.
I think there is no other questions.
Okay.
Sir, thank you for your information-packed, wonderful sessions. Thanks for accepting our invite and coming here.